Good morning or good afternoon, everybody. Welcome back to this week's episode of the Fit Finance Sessions with myself, Tim Webb, and my colleagues Henry and Tom. Now, this week we've actually got quite an interesting topic, certainly a tabloid blasting subject, which has come to rise over the last couple of weeks, and that is, of course, what's been going on with what's been dubbed as the internet versus the hedge funds. I won't do too much explaining. I think I'll leave that to Tom, who knows much more about it than us two, Henry. But essentially, what's been going on is the mass opposing of the hedge funds positions on a couple of shares. I mean, there's 13 shares in total in the US market, which basically the internet is superficially buying just for what seems to be almost an anti-establishment move. But I'll let Tom do the explaining. Tom, do you want to kick us off with what's been going on?
Yeah, so I don't have anything better to do other than work and go on the internet looking at shares. And if you've been watching some shares over the last few weeks, as Tim explained, then you'll see some very strange movements. And it's all based on short selling. What happens when someone is short selling is effectively, so myself as a hedge fund choose to borrow some shares, and let's pick the main one that's going on, GameStop. So I borrow some GameStop shares, and let's say I sell them at £1,000, and then I hope that the price of those shares goes down, and I repurchase them at, say, £200, and therefore I give the shares back, and the £800 is my difference. I have to pay money to borrow the shares and pay a regular premium to keep that up, but I need to make sure the share price goes down, and then I sell them back later on because I'm obliged to return the shares. The problem is if the share price goes up, I have to buy those shares back at a more expensive price. And what's happened with GameStop, which is the largest one, is that the amount of shorts are more than, or supposedly more than 100% of the entire sort of shares in the universe, and therefore what some supposedly clever chaps on the internet have figured out is that if they can make the share price push up, then they can hurt these hedge funds. So they have to keep paying money to maintain their positions, but also if they get to a point where they can't make that, they have to close out their positions. In doing so, buying the shares, and then it's a spiral. The more they can hurt them, the more they have to sell of the shares, or more they have to buy back to cover their positions, and therefore it keeps pushing it up. And it's something called a short squeeze, where you can get a very sharp increase in price as this sort of death spiral of upward movement happens. And effectively, a lot of this also now boils down to the internet and lots of people feeling like hedge funds, and I wouldn't say it's specifically hedge funds, but the 2008 financial crisis, not a lot of people paid for that. Yeah, a lot of sort of lower and middle income people suffered, and the internet and all the various people involved have decided they'd like to stick one to the other side, and so have quite large positions in all of these firms and are refusing to sell, and the longer they hold out, the more they hurt the hedge funds. And supposedly if there's enough momentum, they can keep pushing the stock price up and eventually make some of the hedge funds go bankrupt. I think Melvin Capital might have gone the wrong way already. So yeah, they're currently winning. How long they can hold out for is another question. And a lot of issues politically started where a lot of these platforms weren't allowing you to buy the shares. So Robinhood is the major platform in the US to buy these sort of instruments, and they were blocked from buying the shares, and therefore that has caused a lot of issues where it's seen as double standards, where if the hedge funds want to profit and ruin companies and whatever, then they're allowed to do so. But as soon as the little guy decides to kind of take take the other side, then they're forced away from doing so. So yeah, there's some interesting political conversations going on at the same time. But yeah, what are your chaps' views on, would you buy shares in any of these companies right now?
Well, I mean, I did last week. I made a whole £10 on on GameStop. I rather feel like I might have done a bit better than that somehow. It's such a risky thing to do, isn't it? Because presumably at some point this whole trade unravels and it collapses. There's a reason why GameStop was being shorted, and that's because it's not a very good business. Its model of business is prehistoric, and the reality is it's probably not going to be around as a company for very much longer, unless of course they release some stock options right now and raise a huge amount of money in doing so. But so I don't see that ultimately the value of the company is much lower than it is. And so at some point in time, when this trigger is pulled by whomever it's pulled, the stock price will fall from whatever it is, $400 down to $13 or lower at some point in the future. I guess the risk is you don't know when that's going to be. And I suspect now, I don't know. I mean, is there still an upside? On Tuesday, it was trading at about 200. And I said, whoa, that's way too expensive. I'd never get involved in that price. But I could have done with my money. I could be retiring right now, almost, maybe not. But so I think it's a hugely risky thing. I mean, we've spoken about Bitcoin in the past, and if Bitcoin was 10 on the scale of risk, I think this way surpasses the risk that people are taking in Bitcoin.
Yeah, it's got past the point of any form of sensibility financially, isn't it? I think, well, as you said, Tom, it's not really about the money for these guys anymore. You know, they've kind of accepted they're going to lose the money at some point. It's more just, yeah, as you say, sticking it to the big money, as it's called, and trying
Stick it to the man.
Yeah, exactly, and do as much harm as they can. And I think it's interesting though, isn't it? Because there's always this sort of ongoing conversation, or recently, I suppose, in the last couple of years, as to how much or how heavy the retail money actually is in the market, and how, whether it has all that much of an effect at all, or whether or not it can do or cannot. But just to put some numbers behind what's going on, I read this morning, GameStop in particular has gone up 1,600% as a result of all this. So that's crazy. It's 1,600% as a result of all this. Which, as you said, yeah, I've got this figures in front of me. Melvin Capital ended January with a loss of 53%, and having to be basically bailed out by investors chucking more cash at them. So, as you say, they're certainly winning. they're definitely licking their wounds, as it were. It's supposed to see how it unfolds.
Do you know what the market cap? I don't know the answer to this question, but do you know what the market cap now of GameStop is and what that compares to? No, just wonder if it's now the same value as, I don't know, BP or something.
Well, I don't think anyone's really worrying about fundamentals or actually. It's all just based off internet memes. But I think the thing is, yeah, there is power in retail money. I think it's amplified by this shorting process, because it forces these hedge funds with big positions to buy shares to close out the positions. It's happened before. I think Volkswagen had a short squeeze before. It's how long people can hold in that position without getting bored or greedy and taking their gains, which they're perfectly entitled to do. And Henry's right, it will unravel at some point. I think most analysts value the company at $13 a share. I think AMC Cinemas, which is the other one, the other major one, there's lots of smaller ones, they're valued at $2 a share and is currently at $12 or $13. So big disparity between what people think it's actually worth. And I think you're seeing a very weird phenomenon where I think AMC, a lot of their creditors managed to convert their debt into stock, and they're talking about doing another capital raise because of the share price going up. They're now actually able to raise more money, which might actually help the company survive. So I think Hertz was another one recently where managed to do a new listing for new shares in the process of going bankrupt at the same time. So it's definitely a mad world. I think if you want to participate in internet fun, then just make sure it is very, very small positions and it is money that you do not mind losing, because it will come crashing back down. It's just no one knows how far they can push it up in the short term, but yeah, it's entertaining all the same.
Yeah, 2 digits, I'd say. Tenner, 20 quid, chuck it in or something, but no more than that. Excellent. Well, do you have anything else to add, Henry? Or
no, not really. I'm just logging into my stockbroking account right now to go and chuck another £5 at GameStop.
Brilliant. Well, this may be the last time you attend one of these.
Well, no, that's it. I'll be on my desert island next weekend.
Well, the strategy, everyone is trying to get to the moon, Henry. So we'll see each other at Elon Musk's space station with our enormous positions. I think one thing to add is we are not giving financial advice. We do not recommend that you go.
Massive count out there.
Yeah, it will end up badly, and I think a lot of people are prepared to lose money for the sake of a moral compass. So yeah, fair play to them, good luck to them, and yeah, if someone makes some money. I know lots of people paid off student loans and medical bills and things like that, so there's some good coming out of it at the same time. But yeah, until then, we will see you next week for hopefully some more interesting events.